Hello, everyone, and welcome back to a brand new episode of ElTeacher. The world of money is vast, and there are still some important vocabulary terms you need to know. That's why, in today's episode, we're diving deeper into this fascinating topic of money. You'll learn new words and phrases that will be incredibly useful for your daily conversations. Expanding your vocabulary is a crucial step in improving your language skills. A solid understanding of these terms can greatly enhance both your personal and professional success. First, you'll listen to a short audio where the vocabulary is used in context. Then, we'll break down each word and phrase together, exploring their meanings and how to use them effectively. By the end of this episode, you'll feel confident applying them in real-life situations. Hey Sarah, I've been thinking about starting my own business, but I'm not sure if I can afford it. Everything seems so expensive these days.
I get what you mean, John. Have you checked your disposable income or spare cash? That could give you an idea of how much you can actually invest without affecting your regular expenses.
Good point. I've also been comparing the prices of some equipment I'd need, but I think I'd still need a loan to get started. Do you know how I can improve my credit rating?
Definitely. First, make sure you pay off any outstanding debts on time. A strong credit rating will help you secure a better interest rate on your loan.
That makes sense. By the way, do you know which currency I should focus on if I want to expand internationally?
It depends on the market. If you're targeting Europe, for example, you'd need to deal with euros. Keep in mind that exchange rates can affect your profit and loss, so stay updated.
That's a great tip. And speaking of finances, I heard I'll need to calculate my gross income versus my net income to know what I'm actually earning after taxes.
Exactly. Don't forget to account for expenses too. It's all about balancing your profit and minimizing your loss.
Thanks for the advice, Sarah. You've made me feel a lot more confident about getting started.
Anytime, John. Starting a business is challenging, but with the right financial knowledge, you'll do great.
So the first word that we have is price. It's a word we use all the time when we're shopping or talking about money. The price of something tells you how much it costs, how much money you need to buy it. For example, if you're at a store and see a shirt with a tag that says $25, that's the price of the shirt. But here's the interesting thing, prices can change depending on where you shop, what's on sale, or even the time of year. Have you noticed how the price of ice cream sometimes goes up in the summer? That's because people want it more when it's hot outside. For example,
The price of this laptop is $500. I think it's worth it for all the features it has.
what's the price of that jacket?
It's $60, but it's on sale for $45.
The price is the amount of money required to buy a product or service. It's what you see on the tag when you're shopping or hear when you ask, how much does this cost? The price is how much you need to pay to own or use something. Now let's talk about the word expensive. Expensive means something costs a lot of money or has a high price. It's the opposite of cheap and is often used to describe items or services that are luxurious, high quality, or overpriced, depending on the context. For example, imagine you're shopping for a phone and one of them costs $1,200. You'd probably say, wow, that's expensive. But here's the thing, expensive doesn't always mean bad. Sometimes expensive things are worth it because of their quality. Think about a well-made pair of shoes. They might be expensive, but they'll last for years. On the other hand, some things are just overpriced, and we call them expensive because they don't seem worth the money. For example,
The tickets for the concert were so expensive that I decided not to go.
Did you see the new smartwatch?
Yeah, it looks cool, but it's way too expensive for me.
if something feels expensive, always ask yourself, is it worth it? Sometimes paying more upfront saves money in the long run if the quality is better. Let's talk about the word loan. A loan is like borrowing money from someone, but on a bigger scale, usually from a bank. For example, if you want to buy a car but don't have enough money, you can apply for a loan. The bank gives you the money up front, and you agree to pay it back in small amounts every month, often with a little extra called interest. Now, loans aren't free money. They're helpful for things like buying a home or starting a business, but you have to be responsible. If you don't pay back a loan on time, it can affect your credit score or even lead to bigger financial problems. So, before taking out a loan, it's important to ask yourself, can I afford to pay this back? For example, I took out a loan to buy my first car and paid it off in 3 years.
How did you afford college?
I got a student loan. It covered my tuition, but now I'm paying it back.
Before taking out a loan, always read the fine print. Make sure you understand the interest rate and repayment terms. This can save you from surprises later. Let's talk about disposable income and spare cash. These phrases describe the money you have left after covering all your essentials. For example, once you've paid for rent, groceries, and utilities, the money you have left for dining out, buying new clothes, or saving for a vacation is your disposable income. Now, spare cash is a little more casual. It's the extra money you might carry in your wallet or have in your bank account for fun, non-essential purchases. Imagine you walk by a coffee shop and decide to grab a latte. That's where spare cash comes in handy. For example,
After paying all my bills, I use some of my disposable income to buy concert tickets.
I always keep a little spare cash in my wallet for snacks or parking.
Do you have any spare cash on you?
Yeah, I've got enough for a coffee if you want to grab one.
Treat your disposable income or spare cash as an opportunity. While it's great to enjoy some of it, make sure to save or invest a portion to build a secure financial future. Then we have currency. Currency is the official money used in a country. It can take the form of paper bills, coins, or even digital money. Each country or region has its own currency, like the US dollar, the euro in Europe, or the yen in Japan. It's what people use to exchange value and buy goods or services. One interesting thing about currency is that its value can change when compared to other currencies. For instance, $1 might not always equal €1. It could be worth more or less depending on the exchange rate. That's why travelers often check how much their currency is worth before going to another country. These days, we're even seeing new types of currency, like cryptocurrencies, which are digital forms of money. But no matter what kind of currency you're using, the goal is the same: to exchange it for things you need or want. For example,
When I traveled to Japan, I had to exchange my dollars for yen because that's their currency.
What currency do they use in Mexico?
The peso, it's different from the US dollar. Before traveling to another country, always check the exchange rate for their currency and compare it to yours. This will help you budget better and avoid overspending.
credit rating. A credit rating is a score or evaluation that shows how trustworthy you are when it comes to borrowing and repaying money. It's used by banks, lenders, and financial institutions to decide if they should give you a loan or a credit card, and what interest rate to charge. A high credit rating means you are reliable, while a low credit rating means lenders might see you as a risk. Your credit rating is basically a financial report card. It shows how good you are at managing debt and paying it back. For example, if you always pay your bills on time and don't borrow more money than you can handle, your credit rating will likely be high. This is great because banks are more likely to approve your loan or give you a lower interest rate. But if you miss payments or borrow too much, your credit rating can drop, making it harder to get approved for things like a mortgage or even renting an apartment. For example,
My credit rating improved after I started paying off my credit card in full each month.
Why was your loan application rejected?
my credit rating is too low because I missed some payments last year. A good credit rating helps you get lower interest rates, higher credit limits, and faster loan approvals. A bad credit rating can make it difficult to borrow money, rent an apartment, or even get some jobs. Take a moment to think about your own financial habits. If you had a credit rating right now, would it be high, low, or somewhere in between? And what steps could you take to improve it? Remember, even small changes like paying bills on time can make a big difference. Next one is tax. A word that might make some of us a little nervous, but it's something we all deal with. A tax is money that you pay to the government, usually based on what you earn, spend, or own. For example, if you work a job, part of your paycheck is taken as income tax. If you go shopping, you might notice a sales tax added to your total at checkout. But what's the point of taxes? Well, they're used to fund things we all rely on, like schools, hospitals, and roads. So while paying taxes might not feel great, they help keep the country running smoothly. For example, when I got my first paycheck, I was surprised by how much was taken out for taxes. Why are these shoes so expensive?
It's because the sales tax is really high in this state.
Tax rates and systems vary widely between countries. In some places, taxes are higher but come with more government services, while in others, they're lower, but individuals pay more out of pocket for things like healthcare. Gross. In finance and money-related contexts, gross refers to the total amount of money earned, received, or spent before any deductions like taxes, fees, or expenses are subtracted. It's the big number you see before anything is taken out. For example, if you have a job and your employer says you earn $3,000 a month, that's your gross income. But when you look at your paycheck, you'll see a smaller number, maybe $2,400, because deductions like taxes, insurance, and retirement contributions have been taken out. That smaller number is your net income, but we'll save that for another day. So gross is all about the big number, the total amount before any of those pesky deductions are applied. For example, my gross income is $50,000 a year, but after taxes and deductions, my take-home pay is much less.
What's the gross revenue of your business?
It's $100,000, but after expenses, the net profit is only $60,000.
Always check whether a financial number is gross or net, especially when making big decisions like taking a job offer or evaluating business profits. The gross number might look impressive, but the net amount is what you actually keep. Next, we have profit. Profit is the money a person or business earns after subtracting all expenses. It's the financial reward for running a business or making a successful transaction. In simple terms, profit is what's left over after you've paid for everything it took to earn the money. For example, imagine you bought a pair of sneakers for $50 and then sold them for $70. After subtracting your $50 expense, you've earned a $20 profit. In business, profit is one of the most important measures of success. A company's profit shows whether it's earning more money than it's spending. No matter how much a business makes in sales, if their expenses are higher, there's no profit. For example,
Our gross profit was $50,000, but we still had to pay for rent and salaries.
How's your business doing?
it's great. We made a profit of $10,000 last month after covering all our expenses. Here's something to think about. Have you ever sold something for a profit? Maybe you flipped an item online or earned money from a side hustle. Write down the costs and the final price you sold it for. How much profit did you make? It's a great way to practice financial awareness. In financial terms, a loss occurs when your expenses or costs are higher than the money you earn or receive. It's the opposite of profit. A loss can happen to a business, an individual, or even on a specific transaction when you spend more than you gain. If profit is when you earn more than you spend, loss is the exact opposite. It's when you spend more than you earn. For example, imagine you start a small business and invest $1,000 in supplies and rent, but you only make $800 in sales. That $200 difference is your loss. Loss can happen for a lot of reasons. Maybe sales were low, costs were too high, or unexpected expenses came up. But here's the important thing: losses are not always a bad thing. For new businesses, it's common to have losses at the beginning while they're still growing. The key is to learn from them and adjust your strategy to avoid future losses. For example, I sold my car for $2,000, but I originally bought it for $3,500, so I took a loss of $1,500.
How's your business doing?
Not great. We had a loss this quarter because of rising costs and fewer sales.
If you experience a loss, don't panic. Use it as an opportunity to analyze what went wrong. Losses can be valuable lessons that help you improve your financial decisions or business strategies. Finally, let's listen to the conversation one more time and see if you can spot the vocabulary we just learned. Hey Sarah, I've been thinking about starting my own business, but I'm not sure if I can afford it. Everything seems so expensive these days.
I get what you mean, John. Have you checked your disposable income or spare cash? That could give you an idea of how much you can actually invest without affecting your regular expenses.
Good point. I've also been comparing the prices of some equipment I'd need, but I think I'd still need a loan to get started. Do you know how I can improve my credit rating?
Definitely. First, make sure you pay off any outstanding debts on time. A strong credit rating will help you secure a better interest rate on your loan.
That makes sense. By the way, do you know which currency I should focus on if I want to expand internationally?
It depends on the market. If you're targeting Europe, for example, you'd need to deal with euros. Keep in mind that exchange rates can affect your profit and loss, so stay updated.
That's a great tip. And speaking of finances, I heard I'll need to calculate my gross income versus my net income to know what I'm actually earning after taxes.
Exactly. Don't forget to account for expenses too. It's all about balancing your profit and minimizing your loss.
Thanks for the advice, Sarah. You've made me feel a lot more confident about getting started.
Anytime, John. Starting a business is challenging, but with the right financial knowledge, you'll do great.
I hope you enjoyed learning these essential money-related terms and now feel more confident using them in your conversations. If you found this episode helpful, don't forget to share it with someone who could benefit from it too. Remember to visit our website where you can download free printable activities and practice everything you've learned today. Plus, you can catch up on all the episodes in this series, tailored to your level. Thank you for tuning in. I'll see you next time. Keep practicing, stay motivated, and as always, keep leveling up your English skills.